Hello, welcome to Money Matters TV. I'm Mike Dever, founder of Brandywine Asset Management and host of today's show. My co-host is Audrey Greenberg, co-founder of Centers for Breakthrough Medicine. And hello, Audrey.
Hey, Mike. Good to see you.
Hi. Yeah, you as well. And our guest today is Adam Davis, co-founder of uNiFund, and we're going to talk everything crypto. So before we get to that, Audrey, I want to ask you some questions about biotech, your field. The biotech index has been taking some of a hit since the highs in February 2020. How is this impacting you and your sector?
Yeah, I would say overall, it's actually positive for outsourcing. It's unfortunate, although, for some of the patients out there that have their programs potentially being scrapped, particularly in the rare disease space. But with the cash being very tight and the unfortunate need to do potentially a down round in some of these companies, we are here at the Center for Breakthrough Medicines to help them stretch their cash up to 4 times longer through outsourcing models. So instead of building the manufacturing site that they potentially wanted to build and control their manufacturing, they can now outsource to a contract development manufacturing organization. We can do their research, their development, their manufacturing, all at our site here in King of Prussia, where we have 300 plus of the most experienced cell and gene therapy scientists in the world working at our site. So it's unfortunate for the market, which hopefully will recover soon, but hopefully it makes a more efficient use of capital for these innovator companies to realize they don't have to build their own manufacturing and hire an entire team of people and buy very expensive, hard to get equipment. They can outsource their manufacturing to the experts.
Well, that seems like something that would make sense despite the economy. And, so you had some meltdown, valuations, tough to get the funding. They can't build out their own, development or their own, hardware like that you provide for them. Yeah. But why would they, what would be the reason for them to ever do that rather than?
Yeah, that's a good question. I think there was a really common underlying belief going back a year or even 2 years ago that they would get a higher valuation if they controlled their manufacturing. And while cash was flowing and valuations were at all-time highs, there was a lot of excess development, physical development and manufacturing capacity. So now we're seeing a lot of biotechs approaching us. Do you want to buy our excess capacity? We'll lease back 20%. But unfortunately, it doesn't make sense for us to have these little hubs all over the country. It's better to have an economies of scale all in place at the Center for Breakthrough Medicines at Discovery Labs here in King of Prussia. So it's good. We have 1 million square feet here. People can come to us, but it's a great question. I mean, why did these companies build their own manufacturing when it's $2,000 a foot with equipment just for the physical space? And it can take 3 years between finding a location, getting it zoned, building it, getting it equipped, getting it through what we call IQ, OQ, which is basically qualified to use. So outsourcing is easier. I think that people are realizing that more now than ever, and we're certainly here to partner with those organizations and make it easier for them.
How quickly can you get them up to speed when they come to you rather than that 3-year time period? What's it take for them once they sign the deal for you guys to get up and running?
Yeah, I mean, we can do work immediately. We look at our schedule. We see what's being planned in terms of our queue. Right now, we do have immediate capacity in viral vector manufacturing and cell therapy production as well. We're building plasmid production, which is coming online later this year. And we also have current availability in our testing labs. So a lot of these therapies, when they're manufactured or when they're in development, you need to test them along the way to make sure they're pure and make sure they're effective. And some of these labs, you have to wait 6 to 9 months just to get results back. So we have testing capacity now where we can provide all the analytics, analytical development, and testing needs as the companies are going through their process.
And once, how does it amortize out cost-wise between them building it out themselves and going to you? What's
That's
the difference?
Yeah, that's a great question. So it's an OpEx play, right? You're variabilizing. That's a word, your costs, right? And so instead of these tremendous upfront fixed costs, you can have a more efficient use of upfront capital. Obviously, $1 today is worth more than $1 tomorrow, unless you're in deflation, of course. But hopefully that's not happening. But so in any case, we are very excited about helping companies extend their runway from a cash perspective, and really allow them to utilize their capital for cures, right? I mean, look, we're all here in the biotech world for the patient. And the more that you can use your capital for new cures and new therapies and new treatments, the better off everyone is.
Okay. Now I have seen some announcements on executive hiring from you guys on that front. It seems like a difficult environment. How are you doing that, and how's that working out?
Yeah, it's a great question. We are super excited. We just actually hired John Lee. He's running our cell therapy division. We're very happy to have him. Just the expertise in Philadelphia is really quite amazing. So, I'll talk to my colleagues that work in Boston or North Carolina or San Francisco. In Boston, the issue is people are changing jobs every 2 minutes, the trading up mentality. In North Carolina, you have a lot of these research institutions, but not a lot of people with 5-10 years of experience. In San Francisco, you have a similar problem to Boston. So Philadelphia is special because we have the research institutions and the academic institutions that are churning out talent. Oh, by the way, as well as the community colleges. Like, for example, Montgomery County Community College has a biomanufacturing program where you can get accredited in biomanufacturing. So we have all these incredible institutions similar to North Carolina. But what we also have is big pharma tenure. We have all these biotechs in the area that are baby traps and baby pens, these companies that spin off. And so there's a tremendous talent pool of not only biopharma manufacturing and big pharma, but also cell and gene therapy experience. So we're lucky to be based here, and we really have been doing a great job of hiring from John Lee, who I mentioned earlier, to really all aspects of our organization. We're able to find here locally in Philadelphia, which is quite nice.
Are you able to partner with, was it Montgomery County, you said?
Yeah, you know what? We've been looking at partnerships. Jefferson Institute of Bioprocessing also has a really great program. They can do, ad hoc sort of classes and programs for certain aspects of manufacturing, whether it's gowning or GMP, good manufacturing practices, or whatever the quality analytics, whatever your current needs are. They have these out-of-the-box solution or can customize programming based on your needs. So we love Jefferson Institute of Bioprocessing, and they're right near our site. But also there's many other programs downtown at the Science Center and at Wexford and some of these other institutions that really do have interesting ways of churning out talent. Okay.
All right. I appreciate it. Thank you very much. I'm going to go to an audience question here.
Oh, boy.
The question is from Jack Tillman in Philadelphia. How are stem cells and tissue engineering developing in today's biotech world?
Well, we're in an exciting time for cell engineering. And basically what that means is we are making advances specifically in heart and liver, but in a lot of other modalities as well. And what we're most excited about at CBM is the ability to take iPSCs, and that can lead to the generation of really any tissue in the body. So when you're talking about damaged tissue and organs, in certain gene therapies or cancer, specifically when cancer is attacking an organ or tissue, we have the ability to generate new cells and replace those defective cancerous cells with these new cells. So it's an exciting time. There's a lot of advances in front of us, and a lot of progress is being made with iPSCs.
That's great. Thank you. And if you're interested in having your question answered, here's how to send in your questions to Money Matters TV.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Okay, and so with that, Audrey, we have a warm welcome to Adam Davis, the co-founder of uNiFund, and we're going to start talking about crypto. Hello, Adam.
Hi, Mike. Hi, Audrey. Thank you for having me on the show.
Well, thank you. I appreciate it. This is obviously it's a hot topic. It's really interesting. I don't go a day without somebody asking me something about blockchain, crypto, NFTs, especially it seems like NFTs lately. So we're going to get to that. But if you can first, give us a little background. How did you get into this area?
Yeah, I mean, I think not a day has gone by for me for many years where someone hasn't asked me some sort of question about Bitcoin or Ethereum or blockchain in general. But I go back a fairly long time in this space. I've been an early investor, an early adopter in Bitcoin. Going back 10 years now, I came across the Bitcoin white paper. And as you may or may not know, that white paper discusses a decentralized platform for distribution of, some store of value from one person to another. And coming out of the financial crisis in 2008, that just seemed like a really sort of interesting thing for a more decentralized monetary system. And, we're still, like you said, very, very early in this space. For me, I began mining Bitcoin around 2012. So I was, buying GPUs and utilizing that GPU power to mine some Bitcoin. And then, moving forward through the, kind of smart contract and Ethereum sort of revolution of 2015. I did the same thing there. I had 45 different GPUs all going in my basement all at the same time in the summer of 2017. And, wow. It's just a really, it turned from something that was a hobby into something that, turned now into a profession. And
okay. Let me talk about that a little bit, because the white paper came out. It talked about Bitcoin, and Bitcoin was kind of launched out of that. So what really, now there's Ethereum, Bitcoin, Dogecoin, there's so many different cryptocurrencies. So what is a cryptocurrency? Is there something that's distinguishing about all of them, or are they similar?
Yeah, at its simplest form, right? A cryptocurrency is a digital asset that allows one person to transfer, some value from one person to another. But there's a few different shapes and flavors, and I think we can get into the difference between Bitcoin and Ethereum and Dogecoin. I think one thing to know at this point, last I checked, there were 15,580 different cryptocurrencies on CoinMarketCap. So, I would say that 90 to 95 to 99% of them are probably worthless. Some are more store of value, some have utility, and others, like you mentioned, Dogecoin, are really just what they call meme coins, and have really no value or utility whatsoever, unless Elon Musk happens to be tweeting about them, and then suddenly they're quite valuable.
So what is blockchain then, and how does that relate to crypto?
Sure. So the blockchain really is the underlying technology that enables crypto to operate. And so, to simplify what blockchain is, just for the purposes of this conversation, you can think of it as a something that's open, transparent. It's really a ledger that both records all of the history of every transaction that's ever taken place. And there are uses outside of finance for blockchain technology. As I mentioned before, there's different things that are just for utility. But I think when I talk to people first and foremost about investing in crypto, for instance, I try to get them to understand the difference between cryptocurrency as an investment and blockchain as a technology. And blockchain, like I said, is the underlying technology that allows for cryptocurrency, but it is not cryptocurrency. It's just kind of the underlying technology.
So those 15,000 cryptocurrencies that are out there, they're all in some fashion relying based on the blockchain.
Yeah. I mean, yes, and so there are two different types of blockchains. There's Bitcoin, for instance, is a decentralized blockchain. So it relies on miners and other participants to keep the network going in a decentralized fashion.
And just let me just interject for a second.
Sure.
So miners, a lot of people are kind of puzzling over that term, but essentially it's what you were doing when you were mining. It's just running an algorithm on a computer or computers at when you solve, you get allotted, you kind of win.
Correct.
Something coins on the blockchain, essentially cryptocurrency on the blockchain, and now that's recorded and it moves on, or you can use it for transactions. Just authorizing, I guess, transactions is whatever as well.
Correct.
And,
The mining has two functions in the Bitcoin space, at least, or any proof of work. Not to get too deep into this, but when you mine Bitcoin, you are solving a cryptographic equation, which is then recorded on the blockchain. And like you said, Mike, it's then recorded as yours. So the miner who or the mining collective who solves a block gets that particular Bitcoin and then may hold it or sell it back into the market. And then every time a transaction occurs on the blockchain, or at least on the Bitcoin blockchain, miners need to validate that transaction and essentially to keep bad actors essentially from trying to fool the blockchain. The algorithm that is behind that, the cryptographic equation, once it's been solved by 6 or 7 miners and it's been confirmed on the blockchain, then the transaction can go through and then it lives forever on the blockchain, essentially.
Okay.
And how all these different cryptos, right? So I remember I first put in some money in crypto, and my husband was really questioning my decision. And I explained to him, and tell me what your thoughts are on this, that it's not that much different than the stock market. Some of these speculative companies that don't have any revenue yet, a lot of the biotechs, like for example, that are working on, they're very risky. They have 10% chance of success. What is the real valuation? And so the question is, how do you know what the value of this is, right? Like, what is Bitcoin? What's Ethereum? How are all these cryptos different? And we talked about this a little bit, but they're so volatile. Where is this volatility coming from? And what is the underlying value? Are they worth anything, or they could just all go to zero in a heartbeat?
Well, that's a big question. Let's start with what Bitcoin is, where it derived its initial value, and kind of go from there. So we talked a little bit about mining, right? And so if you take the electricity usage that was utilized in order to mine that initial Bitcoin, that gives it some intrinsic value. It costs, let's just say in 2009, $55 of electricity to mine 10 Bitcoin. Okay. So then you have this commodity, that's been, sort of placed into Bitcoin. and it that sort of was its first place that it got its intrinsic value. Obviously, the market dictates what the real value of Bitcoin is worth, and I think, to me, the simplest way to look at it is that Bitcoin is kind of a digital gold. I say that because there is a finite value to it, and so there's some scarcity, and you get more of a real sort of supply and demand sort of simple economic valuation there when you have a market. And for instance, now, just to bring up an example of the volatility in Bitcoin, there's very little supply that's actually out there to be sold on the centralized exchanges. And when you have that dwindling supply, it doesn't take much demand for the price to move up. So just in the last few weeks, Bitcoin went from 36 or 37,000 all the way up to 45,000. And
Wow.
Incredibly, a lot of that was driven by some fundamental and sort of macro global factors around Russia and Ukraine.
Yeah, do you see crypto as like a leading indicator of the market at all?
There's been a pretty tight correlation.
Yeah, I've noticed that.
With both risk assets and tech stocks, and even the S&P. In the last 3 or 4 months, we've seen a little bit of a divergence from that. But I think that, I don't know if it's necessarily leading or just sort of mirroring the S&P and the NASDAQ. But I think one of the things that we've noticed, at least in our research for our firm, is that as those risk assets are tied to the crypto market, there's you certainly can see when the stock market moves, the crypto market moves. And I think a lot of the reason for that is that since the big crash of 2020, when the pandemic began and we had that black swan event across the entire globe, Bitcoin lost, essentially 70% of its value overnight. It dropped from, almost $10,000 to down to $3,000. And so maybe to answer your question about could it go to zero tomorrow, the answer is probably no. I think that if there were a time for that to have happened, it probably would have been then. But we've seen a lot of institutional influx in capital. You can see that in sort of on-chain analytics, and I think the more sort of more traditional finance puts between 1% and 5% of their assets into Bitcoin or other crypto assets, I think the more stable the price has become, even though it's still extremely volatile.
One, as you point out, they're not like Bitcoin in particular. They're making less and less of it. I think we just mined the 19 millionth Bitcoin out of a total of maybe 21 million that are going to ever be created. So, and some of those are just lost. People forgot the keys and they can't even find them anymore. So you do have, if you have a steady increase in demand and the declining supply, that just can push it up, even if there's no utility use for it. But I do want to ask that. So it's not so much Bitcoin, but jumping over to NFTs and with Ethereum. So what is an NFT and how is that related to crypto?
So that's a big question. So I think the ideal way to define an NFT, and calling it what it is, which is a non-fungible token, which begs a whole other question. What the heck is a non-fungible token? So we're not going to dig into that, but let's think about
I knew it had something to do with mushrooms, that's
right,
all I
exactly.
know. Right.
So let's think about fine art or baseball cards or other type of things that are collectible and rare. At its root, an NFT is a digital collectible. So there's an artist behind it, or there's a moment behind it, or there's some sort of collectible piece behind it. And I think it's a hard thing for some people to understand. But as I think back to my childhood owning baseball cards and other things like that, and certain adults in my life saying, oh, they're never going to be worth anything, or they're only going to be worth whatever the market demands. But you can really think about NFTs as the same as these same things, with the analog being in the physical. An NFT is tied to a smart contract, and that's kind of going back to the blockchain. There is a uniqueness and proof of ownership. So you own an NFT, it's a piece of art. You can either sell or trade that NFT, and essentially your private key. Again, we didn't talk about that much, but your piece of the blockchain is ownership of that. But like, giving a quick example, I know that we're running short on time here. Maybe you had a concert like Coachella, and I think for the last 10 years we've been seeing physical tickets sort of disappearing, mobile tickets and electronic PDF tickets coming into the fold, and like that really takes away from your memorable concert experience, right? Like, but I think as we are moving forward, the biggest increase that I think the populace is going to see in NFTs is tickets becoming NFTs. And thus you have that maybe one of one or one of 10 NFT. You have your memorabilia, and you might have an NFT that maybe at an event like Coachella unlocks all sorts of VIP access and things like that. So, I mean, we could probably do a whole segment on NFTs, but there's a lot to dig into there.
So electronic trading card's not a bad correlate kind of analogy. Yeah.
Exactly.
Yeah.
So in our last 3 minutes, I have to ask, can you talk about Meta? Like the metaverse and how that relates to all this and what it means for us in our futures.
Absolutely. I mean, NFTs are a big part of the metaverse. So I think the better term for metaverse is actually Web3, right? Web 1 allowed for information sharing across the internet. Web 2 allowed for us to sort of share pictures, and it evolved for e-commerce platforms like Amazon and eBay and other, payment flows like PayPal. However, Web 2 was still owned by the tech companies, Facebook, Google, Amazon, things of that nature. Web 3 is more decentralized, and it's really a place where it's its own infrastructure, where the community who creates it owns it. So it's something that we all can have a say in, something that we all can own a piece of, something that we all can buy or sell experiences in. And I mean, once you've sort of educated yourself in the metaverse, the more you'll be able to sort of experience and sort of gain value out of that experience.
And I think that's a nice way of thinking about it, but I can't imagine Mark Zuckerberg's pouring $12 billion into the Meta so that we can all profit and share it.
Well, they've got their own sort of metaverse for sure.
Right.
But the Web 3 allows for the rest of us to create our own Facebook if we want.
That'd be great. That'd be great. And Adam, I really appreciate your time here.
Thank you, Mike.
Such an interesting topic. We could have talked for another couple hours.
I think so.
This.
Yeah.
But thank you very much for coming to the show.
Yeah. Thank you, Audrey. Thank you, Mike.
And thank you, Audrey. Our next guest on Money Matters TV is Michael Lefkowitz, of founder and managing partner of Benjamin Ross Group, and he's director of M&A there. Thank you for watching Money Matters TV, where your money matters. See you next time.